If you or someone you love is over 65 and earning under $22,800 a year, there's a good chance the government owes you a tax-free check every single month, and nobody told you. Over 220,000 Canadian seniors are missing it right now. Are you one of them? The simple version, GIS, is a monthly non-taxable payment added on top of your old age security if your income is low enough, according to Service Canada. Think of OAS as a base salary and GIS as a bonus that only pays out if your other income stays under a line. And that line, plus the fact that many people must apply for it, is where almost all the money gets lost. I read the fine print so you don't have to. How it actually works starts with 4 qualification rules. You must be 65 or older, already receive OAS, live in Canada, and have income below a threshold, according to Service Canada. For a single senior, that threshold is $20,800 a year. Think of it like a members-only lounge. You need the right age, the right pass, and to be under the income cap to walk in. The threshold isn't one number. It moves with your household. A couple where one spouse gets full OAS must stay under $30,096 combined. If the spouse gets the allowance, it's $42,144, and if the spouse gets no OAS at all, it's $54,724, according to Service Canada. Think of it like a bridge toll that changes based on how many people are in the car. Here's the size of the prize. At maximum, a single senior can get up to $1,374 a month, and some couples up to $409 a month on 2026 figures. For a single senior, that's $13,304.88 a year, and it's completely non-taxable. Think of it like a raise that skips the tax man entirely. Every dollar lands in your account. Now the mechanism that trips everyone. For many people, GIS is not automatic, even if you already collect OAS, according to Service Canada. A Statistics Canada study found that among seniors who had to apply, only 41% actually did. Think of it like a refund you have to file for. The money is yours, but no one mails it to you unless you ask. There's a second, quieter step people miss: staying enrolled. Service Canada rechecks your GIS every year using your tax return, so you must file annually, even if you owe nothing. Skip a return and your payments can pause. Think of it like an automatic renewal that only works if you keep showing up with your paperwork. Before I get to the biggest mistake, the part that costs the most money, here's a piece of good news most seniors never hear. Since 2019, your first $5,000 of work income is fully exempt from the GIS test, and the next $10,000 is half exempt under federal rules, so you can earn without instantly losing your supplement. If this is useful, subscribe. The next breakdown is already coming. Here's the buried detail the brochure won't shout about. GIS is income tested, and RRIF withdrawals, CPP and investment income all count against it, according to Service Canada. A single senior only $6,000 over the $22,800 line can see GIS collapse from near maximum to zero. That's up to $13,300 for $180 gone to save on $6,000 of taxable withdrawals. Think of it like a cliff, not a gentle slope. And this isn't a rounding error. Losing the maximum single GIS for 10 straight years is $133,480 in tax-free income forgone on 2026 figures. For a couple at the top rate, $169,166.40. Take a typical single senior who never applies at all. Over 20 years, that's roughly $266,000 missed. Think of it like leaving a paid-off house's worth of income on the table. So what does this mean for you? If you're 65 or older and on OAS, pull your CRA notice of assessment, find total income on line 15,000, and compare it to your threshold, $22,800 single. Higher for couples. If you're under it but getting no GIS, that's a red flag you're leaving money behind. Applying is done through my Service Canada account or the paper form. And if you're still saving, structure matters. TFSA withdrawals don't count against GIS, but RRSP and RRIF withdrawals do, according to Service Canada. So keeping RRSP withdrawals low and routing new money into a TFSA can protect thousands a year in benefits. Think of the TFSA as a room the income tester simply can't walk into. GIS is real money, up to $13,304.80 a year, tax-free, and half of eligible seniors never claim it. Next, I'm breaking down how OAS clawback works and the exact income level where the government starts taking your pension back. If you want to catch that, subscribe so you don't miss it.